So, good evening, students. Good evening to all of you. Students, now let's start on this particular part. In the last lecture, students, if you all see in this context, good evening, Kavita. So, the last session, students, that we all have done it in this regard. The final chart, students, that we have prepared was in respect of this chart prepared. Was on this particular part of the payment of tax in this context, students. The electronic liability ledger, students, and the next one was the electronic cash ledger. One was electronic liability ledger, and second one was the electronic cash ledger. So two particular, I think, ledger record we have considered it, and now today, students, will start off with the electronic credit ledger. The credit ledger is therefore now, students, to be considered in our discussion in this regard. Now, only one particular point, students, so far as this particular thing is concerned. Yes, sir. Students, let's look upon to question number 4 once before we introduce this particular the ITC. Question number 4. All of you take question number 4. This question, I think we have not done it, isn't it? So please have a look over here to question number 4 now. Now, friends, as you know, in the yesterday's session, we have discussed about in the electronic cash ledger, 4 points was discussed, friends. 4 point was discussed. So the 4 points, friends, in this particular context is about when the electronic cash ledger would be credited by the government. So we have seen the normal case, students. That is point number 1. And then there was a special case. If you just see the ledger which you have prepared in the last lecture. And in the normal case, students, if you see there is a cash deposit that has happened, which is deposit through the challan or deposit through what? The permitted modes. That also that we have seen in this context. Isn't it? Thereafter, students, we have seen also the special case. The TDS and TCS is what we were discussing about it. So in the context of the special case, also, students, we have considered about the fact that how this electronic liability ledger, students, electronic cash ledger, students, in this context is being credited in the special case, or it is credited, students, in the special case. Then after you have taken the credit, the government has done the credit. After that, students, there would be a corresponding debit, which is nothing but the adjustment that you're going to make. And then we have seen, students, in point number 3, what was that? There was a case of the transfer, students, from the electronic cash ledger. Probably the transfer will take place. And then I have told you what happens, students. There is a concept of first, students, in this case. One is about the transfer within the same GSTIN, and the second one is transfer to another GSTIN but with the same PAN, which is nothing but a deemed distinct person in that context. So in the transfer process, students, what happens is this, that first, students, you will have to unlock where you have deposited the amount. So if it is say CGST tax and I want to pay off the penalty because there is a sudden huge penalty burden which is there, but the amount which is deposited is in CGST tax. So first I need to take a refund out of it. So there is an unlocking that is done from the CGST tax and then in that case to CGST account, and then from that I will do a deposit in the penalty, CGST penalty, the minor head which is penalty. That is what we have discussed, students, in this regard. That is how the things has to be looked upon. After that, the last point, students, after the transfer, the last point I've talked about, students, is about the refund of the unutilized amount. And as I told you in this context, students, that is the refund, students, the right of the refund is an inherent right. And the amount, is it always refundable? And the answer is yes, in this case. And the claim for the refund, students, as you all are aware, has to be done through the process of what, students? Through the process of the application. Claim for the refund, students, has to be done through the process of the application. Is that clear to all of you, students, in this context? Now, students, let's look upon to this particular question number 4. In this case, what you can do, students, in this question number 4, against that point number 3 that you have written, the third point, which is the transfer part. So in that transfer point, students, can you just write there in question number 4? In that point number 3, transfer from the electronic cash ledger, probably wherein there was point number A and point number B. So in that point number 3, you can just make a reference of refer question number 4. So that parallelly, I am also doing the questions with all of you. So Mrs. PPC and company have availed input tax credit of rupees 42,500 during September under the IGST head. So has availed what? The ITC of rupees 42,500 during the September under what? Under the IGST head. Instead of availing 21,250 under CGST and SGST head. So he has availed, students, in this case ITC credit. So credit has been used, has been availed where? In the IGST. This is the credit I'm talking about. Instead of availing what? He should have availed where? In CGST and SGST. What does it imply is that, students, is nothing but there was an intra supply of goods, and in the intra supply of goods, the CGST and SGST is charged. So where the credit should have been taken, the credit should have been availed in the category of CGST and SGST. The credit that should have been taken should be in the category of CGST and SGST. But what we are witnessing is a credit has been taken not in the category of CGST and SGST, but it is taken on the category of the IGST. It is taken in the category of what? The IGST. That is where, students, the credit has been taken in this regard. That is where, students, the credit has been taken in this regard. I hope that all of you are clear with this one. Every one of you. So this is precisely where, students, the credit has been taken. Okay, so this is the wrong credit that they have taken. Technically, that is what they are trying to say. Now, Mr. X, an accountant of the above entity, would like to use form GST PMT09 for making a transfer from IGST head to respective CGST and SGST heads. So, is this PMT09 form, which I have already discussed with all of you, when you have to do a transfer, students? So that transfer you have to do, students, is through that GST PMT09. That is the form that you all fill in this context. So this is the form that he wants to fill to do the transfer from IGST to CGST and SGST account. Examine the scenario and offer a comment. What is your take, students? Is this particular transfer a valid transfer, students? And the answer is no. Primarily, he is trying to transfer, students, in this case. What he is trying to transfer? He is trying to transfer the electronic credit ledger. In that electronic credit ledger, he wants to transfer, students, in this case. Now, where this transfer concept has been taught to you? Where this transfer concept has been taught to you? The transfer has been taught to you in the concept of ECL. So if I have done a deposit, so in ECL first you have to do a deposit, and the deposit, students, that you will have to do in the context of the transfer, you will have to choose a minor head, in this case say tax, it's a CGST tax, and then maybe from there I take the money out from this, which is a deemed refund, and then put where? Put to the another minor head. Say in this case the another minor head is a penalty. The another minor head students in this case is say penalty. That is where I need to do the transfer in this context. That is where students we need to do a transfer in this context, isn't it? And that's exactly the point over here. That exactly the point students over here. So I hope that all of you are clear with this one. Every one of you. Good evening, Krupa. So therefore, this concept of transfer is not under the electronic credit ledger. The concept of transfer students is in the electronic cash ledger. So therefore, now you tell me, is this action on the part of Messrs. PPNC and Company? Is the action on the part of Messrs. PPNC and Company? Is it a justified action? And the answer is no. Is that clear to all of you, students? Every one of you? That's exactly the point. So this is what it is in this context. So therefore, this question number 4 has been done. Now the last particular ledger account students that we have to go about it is the electronic credit ledger. The last ledger, I think the last ledger is therefore now students in this case is the electronic credit ledger. So obviously students, this electronic credit ledger has to do with the ITC in this context. So therefore, electronic credit ledger. So this has to do with the students ITC. So students, always keep in mind on the ITC principle, students. ITC students, the input tax credit that you all know has got two elements in that. And what are two elements? One is the availment of the ITC. One is the availment of the ITC. And another is students, the utilization of the ITC. Availing the ITC students, and second one students is utilization of the ITC. Primarily over here in this context. Now, availing the ITC students is governed by the following section. When you talk about availing the ITC, so for that we will refer section 16 and 17 in the ITC chapter. The conditions to avail the ITC, those are being given in those sections itself. After that, there is a special case of availing the ITC which is given to you in section number 18. I am not discussing these sections right now. That will discuss any case in the ITC topic. And so far as utilization is concerned, students, in this case, there is only one section, and that section, students, is section number 49 only, which is there for the purpose of utilization. And along with that, students, if you see over here, it is section number, rule number 86. Rule number 86, students. So that exactly is the point. That exactly is the point, students. Why, students? So this is how the things has to be looked upon. Now, in this context, students, therefore, let's look upon to the point wise scenario. So, electronic credit ledger, students, in this context is a record of what? Record of ITC availed plus the ITC utilized. Okay. Now, this record, students, is maintained for, be careful, very important point I am writing, students. It is maintained for whom? For the registered person only. Please recall, in the context of the electronic liability ledger, they have used the term taxable person. Didn't they use the term taxable person? In ELL, they are using the term taxable person, whereas over here they are using the term, students, what? Not the taxable person, but this particular point, registered person. So therefore, can we say in this context that the ITC is available only to a registered person? And the answer is yes. Is the ITC, students, is it available only to a registered person, students? To that the answer is yes. That's exactly the point. So therefore, just keep in mind, students, ELL can be for both registered person as well as unregistered person, because they've used the word taxable person. So taxable person will include both the registered as well as the unregistered person in this context, isn't it? And that's exactly the point. So that is point number one in this context. After that, the second point, truths. Entries in electronic credit ledger. So what are the entries, students? So here, students, ITC is available only when, be careful, students, return is filed. Is available only when the return is filed. So can I say, therefore, if the return is filed late, students, then ITC will be available also late. ITC will be available very late, students. If the return is filed late, then ITC will also be booked late. In this regard, that's exactly the point. The third point, students, over here is utilization of electronic credit ledger. This is very important, students. Very important. And just write, students, over here the other two questions, question number 2 and question number 3. So along with that, students, we are doing the questions also so that it matches up to this thing. Otherwise, we get lost in the process as to what is for what. So utilization, students, if you see of the electronic credit ledger, the two things are there. What is the purpose of utilization? That is point number 1. What is the purpose of utilization of the electronic credit ledger? And the second one, students, is the order and the manner. This is very important, students. Order and the manner of utilization. Order and the manner of the utilization. Now, so far as the purpose of utilization, students, is concerned, what they've mentioned over here is only towards the payment of what? Outward tax. So obviously, students, that is forward charge mechanism. Do you tell me one thing then, whether you are allowed to take the credit or whether you are allowed to utilize the credit for the payment of what? The liability which is as per the RCM, and the answer is no. In fact, we also know that in the composition scheme and other particular matters also, we are not supposed to take the credit. Okay, but here is about the utilization part. Here we are emphasizing on the utilization part, and so far as the utilization part is concerned, the utilization would be made only towards the payment of the outward tax amount, which is a forward charge mechanism in this regard. Now, the order and the manner of utilization, students. So let's have a look over here in this context. One is in respect of the order. What is the order of utilization? And second one, students, is about the manner of the utilization. Second one, students, is about the manner of the utilization, students, in this regard. One is about the order of utilization, and second one, students, is about the manner of utilization. So, students, in this particular context, if you see, in the context of ranking, order of utilization, first, you know, students, always you have to exhaust. This we have also done in the first topic, if you can recall that. Isn't it? So, rank 1, students, as you know, first you have to always exhaust the entire ITC or IGST. ITC or IGST, students, that is what it is. Leave some space, students, then you write rank 2. Then the second in the ranking, students, is about the ITC on the CGST. First is the ITC on IGST, second one is the ITC on CGST. And the third one, students, in the order is about ITC on SGST. So these are the ranking of the order of utilizing the credit. This is the ranking of order of utilizing the credit. Now, so far as the ITC is concerned, students, how you're going to utilize it? Once you have taken the ITC on IGST, how you're supposed to use the ITC on IGST? The first, students, over here is obviously first on IGST output tax, OTM writing as a short form. Then CGST or SGST, CGST or SGST, primary output tax as per the registered person discretion. As per whom, students? The registered person discretion. Isn't it? Now, if you talk about ITC on CGST, students, over here, first one, students, is you will first use this ITC on CGST on what? To pay off the CGST on the output tax. The CGST on the output tax. And the second one, students, that you're going to pay off would be on the IGST. On the IGST. That is the second one, students, in this regard. In this context. Why, students? Thereafter, students, the first is the SGST. And the second one, students, is the Is that point clear to all of you? So SGST OT, these are all OT students. Very important point, students. This is a very important area. Kavita. What is the word after RP? Where exactly your RP discretion? This is RP discretion. Whether he wants after IGST credit has been used to pay IGST output tax, still IGST credit is left. Now, whether that IGST credit he wants to use it for CGST output tax or SGST output tax, up to him. He may do equally. He may put everything on CGST. He may put everything on SGST. It all depends on him. However, some questions which are being there, they talk about that they will tell you that this in ITC you will find this kind of question that you are supposed to do it in such a way so as to maximize the cash outflow. So the cash outflow, students, is what they are trying to emphasize upon. So cash outflow, students, is what you are supposed to put across in that particular context. We'll see those kind of a question. So in that case, then as a consultant, you are supposed to guide him that look, boss, you are supposed to ensure that there is a minimal cash outflow towards the payment of tax. So if you've got an ITC, you will see the output liability of the various head IGST, CGST, SGST, how much credit is available for each of the head, and then the IGST credit, once it is used for IGST output liability, whatever is the balance amount, you will then decide how much would be used for the CGST output liability and how much would be used for the HGST output liability, so as to ensure that the overall outflow is kept minimal. The overall outflow is kept minimal, Shruti. Is that clear to all of you, Shruti? So that is what it is in this regard, friends. This is point number 3. Now the last one, friends, is a small point, which is about the refund. So is the balance just the way we have discussed about the electronic cash ledger? that whatever is a balance deposit which is there in the electronic cash ledger, can that be refunded? And the answer is yes. It's like a bank account. You have put the money therein. Now you no longer happen to use it. So can you do a refund? And the answer is yes. What about the electronic credit ledger? Whatever is the credit which is there in that particular ECR ledger, whether you can obtain a refund, the refund is limited, students. And what is it, limited, students? Please have a look. Take a note of it. Balance is refundable as per section 54. In this case, now the situation, students, there are only two situations in which the refund will be given to you. Only two situations. Which are those two situations? First is a zero rated supply. First is what? Zero rated supply. And the second one, students, is the inverted tax structure. Inverted tax structure, students. Now, what is this inverted tax structure? Any idea of that? It is a tax structure, students, where your output liability is lower as compared to your tax on the inward supply. So, say for example, you are paying the output liability at the rate of 9% and your inward supply is subject to tax by the supplier at the rate of 18%. Obviously, you are paying more probably as compared to what? Compared to what is coming from the supplier. That therefore, in that situation, in such situation, the refund is possible. Other than these two, students, you will not be getting any refund. Other than these two, you will not be getting any refund, students. I hope that all of you are clear with this one. With that, students, now let's have a look to question number 2 and 3. Every one of you. Question number 2 and 3. So A makes the intrastate supply of goods valued at rupees 50,000, excluding the taxes, to B within what, students? Within the state of Karnataka. So CGST and SGST liability is what would be there as far as A is concerned because of his intrastate supply. There is no input tax credit balance available with A. So ITC, do we have any ITC for A? And the answer is no. B makes intrastate supply to X Limited. So now B, which has taken the goods from A, for B, he will take a credit of CGST and SGST. And then he is making what, students? An intrastate supply. So for B, the output supply will have the IGST. After adding 10% of its margin. So what is the margin? 50,000 plus. So his selling price of B, so the selling price of B would be how much? 55,000. 55,000, and on that he will charge the GST. Thereafter, X Limited sells it to Y to Telangana. So now in that case, X Limited, which has purchased the goods from B Limited, now X Limited, students, what he is doing? He is doing an intrastate supply within the state, and that he is doing it to Y. Now he is adding another margin of 10%. So 10% margin would be on 55,000. 55,000 plus 10%, so 5,500. So that will be his total in that context. And on that, the CGST and SGST would be applied on that output supply. CGST and SGST would be applied on that output supply. Is that clear? Now, next paragraph, assume that the rate of CGST chargeable is 18%, CGST and SGST at 9% each, and IGST chargeable at 18%. So be careful to over here. In this regard, assume that the rate of CGST is chargeable is 18%, CGST and SGST at 8% each, and IGST is chargeable at the rate of 18%. Obviously, that is a total of 9 and 9. And every person involved in the aforesaid supply registered taxpayer. Why they are emphasizing on this word, registered taxpayer? What is the need and necessity of emphasizing on this particular term? So that only a registered taxpayer can claim the credit. Only a registered taxpayer can take the credit. That is the relevance of this particular phrase. Calculate the tax payable at each stage of transaction detailed above. Wherever the input tax credit is available and can be utilized, calculate the net tax payable in cash. At each stage of transaction indicate which government will receive the tax paid and to what extent. So students, herein first supply any case is a normal case. The first supply is an intrastate, so therefore CGST and SGST, that is what it is. 4,500, 4,500, that is 9%, which would be applied on 50,000. Total price charged by A from B would be how much rupees? 59,000 rupees, students. That is what the total price would be charged. Now, if you see over here, A does not have credit of CGST, SGST or IGST. So they don't have any credit of CGST, SGST or IGST for that matter, students. Thus, the entire CGST and SGST charge will be paid in cash by A in this context. Obviously, the first sale, because they are talking about the first sale is the first sale, therefore no credit is there from the previous supply. Therefore, he is paying entire 4,500, 4,500 in cash. This kind of question I think we have discussed earlier in the first chapter itself. And which government will be receiving? You know which government. Now, then he is doing, for instance, interstate supply. Interstate supply, wherein the margin is this much. So, in this interstate supply, 18% in this context. Now, be careful how he is going to pay that IGST. Now, please tell me, whether an IGST liability, to pay the IGST liability, can you use the CGST credit? Yes, we have seen that. Can you use the SGST credit to pay off your IGST liability? Even that is the case in this context. So you have seen, I've given you the chart. See the utilization order and the manner. Point number 3, utilization order and the manner, friends. Point number 3, if you see over there, what they have written in that point number 3, ITC on SGST, ITC, friends, on the SGST. So you take the ITC on the SGST, take the credit in that particular context, and that is what would be then used to first pay off the SGST liability. And can it also be used to pay off the IGST liability? Yes, it can be. Yes, we will be using it. Even that credit would be used in that context. So, friends, if you see, 9,900 is the IGST. Whether this person with 9,900, can he use the CGST credit? Yes. Can he use the SGST credit? Yes. Now, which state government will pay? Now, SGST credit, students. So, which state government? First state, which was first state? Maharashtra. So, Karnataka. So, Karnataka state government, students, as you know, in this case, will be depositing 4,500 with the central government. It is not a payment of tax, but it will be because the credit has been used to pay off the IGST liability. So, can I say therefore Karnataka state will be depositing 4,500 with the central government? Yes, they will be doing it in this context. And then thereafter, credit of CGST, IGST can be used to pay IGST provided SGST credit shall be utilized towards payment of IGST only where, students, see this word, only where the balance of CGST credit is not available for payment of IGST. Please see this one, highlight this particular point. Only where the balance of CGST credit is not available for payment of IGST. Please highlight this particular point. Why I'm emphasizing this one? Already see the rank number 3, students, in the order of utilization. In the order of utilization, rank number 3 is what? ITC on SGST. What is the rank number 3? ITC on SGST. So ITC on SGST, students, you are going to touch only if the other particular credit, namely IGST credit, and the second one is a CGST credit, has been fully exhausted. And then on the balance portion of the amount that you can claim, definitely you can definitely use the IGST credit. Sorry, SGST credit. You can use the SGST credit to pay off your IGST liability. Is that clear to all of you, students? Everyone. So we are through with this one, students, in this context. Any doubt? Okay, last transaction is also left. Third transaction, Telangana. Now, the Telangana case is this much. Now, in this case, students, what the government will do? Central government, now they have got this one, na? The central, now how you are going to pay off, students? Just see how they are going to pay off. CGST payable is 4,5445. Credit of IGST, students. Be careful. Now to pay off this thing, can the credit of IGST, can that be taken? Yes, it can be taken. So from the previous supply, he is getting the credit of IGST. So that credit of IGST can be used. Then the CGST, which is 545545 CGST liability, can the credit of the credit of the IGST can it be used? Can the credit of the IGST, can that be used to pay off the liability of SGST on the order food supply? Yes, it can also be done. So therefore, I'm going to do this now. IGST credit, which is how much? 4445. Now see, this is the hierarchy, students. In this case. So therefore, IGST credit, I am going to use it now. Balance is to be paid in cash to Telangana government. Now tell me one thing, students. In this case, 4,044 students. This IGST credit has been used to pay off the SGST liability to Telangana state government. This IGST credit has been used to pay off to the Telangana state government SGST. And therefore, this amount of IGST has went to whom? To the central government. And that central government amount is being used to pay off the state government liability. So what does it imply? It implies that that much of the amount of the IGST that you have used to pay off the state government liability, that much portion would be transferred to whom? To that state government. With state government in this example, it is the government of Telangana. The government of Telangana, students. I hope that all of you are clear with this one. Therefore, 4,445 will then be paid by the central government to the Karnataka state government. This one, by the central government to whom? To the Telangana state government. Is that clear to all of you, friends? So just see the last particular point, last line only in this example. Just see the last line. Central government will transfer IGST of 4,455, utilizing the payment of SGST to Telangana government. To whom, students? To Telangana government. Is that point clear to all of you? Any doubts? Question number 3, students, like you can take that as a homework. I mean, it's a simple theory question. Can one use can one use input tax credit for payment of interest penalty or payment of GST under the reverse charge mechanism? ITC can only be used for the payment of the GST liability on the output supply or output tax. So therefore, it can only be used for that particular purpose and for nothing else. And for nothing else, students. That's exactly the point, students. So with this, we are done with this particular proposition completely, students, including the questions. Now the next section that comes into play is about the interest particular part. Interest particular part, students. As you know, students, on the interest part, students, herein, if you see, students, make the two columns on the interest part, students, all of you. Just make the two columns. Just make the two columns over here. So over here, students, that you will put across default particulars, default in payment of tax liability, and the next one is IDC, wrongly availed and utilized. ITC, wrongly availed and utilized. Now, students, the first one is section, applicable section over here, section 51, and the interest section, students, that we're talking about it is 51, and over here, students, it is 53. 53. What is the default for which this interest is supposed to be added? So the default that we're talking about it, students, over here is when the person liable to pay fails to pay the tax within the prescribed period. So the prescribed period should, as you know, it is the due date of filing the return. Because I told you in the last lecture also, if you can recall, that the due dates which are being given to us are being given from the point of view of the GST return, are being given from the point of view of the GST return, students. Is that what clear to all of you? Therefore, this is the point. So when the person liable to pay fails to pay the tax within the prescribed period, that is the default. Over here, if you see, students, ITC, wrongly availed, not only availed, it should have been also utilized. So the wrong availment of that credit, the wrong availment of the credit, students, results into a utilization also. So obviously that is naturally it's a wrong utilization, because if the availment is wrong, definitely the utilization would be wrong. But be careful, unless that credit which is wrongly availed, unless that credit which has been wrongly availed, if it is not been utilized, if it is not been utilized, students, then there will not be any interest under section 53. There will not be any interest, students, under section 53. Is that particular to all of you? Every one of you, students. That's exactly the point. Over here, this is about the default, which you need to be very careful. Rate is the same, students, in both the case, that is 18% per annum. Over here, in this context. Now, this interest on what amount? This interest is on what amount? This is the amount, no? The amount on which this rate will be applied, students. In this regard. Now, there are two cases over here. Situation 1 and situation 2. I'm talking about 51 only, not 53. So this is only for 51. So what is the situation over here, students, in this context? So therefore, situation number 1, belated payment. Situation number 1, students, is about the belated payment. What exactly it is? That's how. So over here, supplies made during a tax period are declared in the return of same tax period. Now, this is very important. Then only students it will fall under situation number one. Why I'm emphasizing on this? Because if you remember, students, in yesterday's class only we did one question. Remember that question? Which was it? Question number? The question number, I think you will be aware. Remember in that July month he was doing a payment, and in that he was also making a payment which pertains to the month of February also. One supply he has missed. One supply he has missed, students, isn't it? So he was making the payment for that February month also of that one supply, which he has missed to pay by the due date, which is 20th of March. He has not made the payment. So therefore, now he is making the payment along with the supply of the month of July, which has happened already. So therefore, that is what students we have discussed in this case. So this is where that February month will fall under situation number two, which is any other case. Any other case. Because situation number one, to fall in situation number one, what is necessary, students? Supplies made during the tax period. So in this context, students, this is the supply made during the tax period, students. So students, over here, if you see, supplies are made during a tax period are declared in the return of the same period. So all the July month supplies has been captured in the month of what? In the month of the return, which is the return date 20th of August. So that has been captured. So that will be a situation number one case. But in that August 20th return, we are also capturing the supply which was one supply which was of February month. So for that particular supply, the delay that has happened to make the payment of GST, that will go under the second case. That will go under which case? The second case. I hope that every one of you are clear with this one. In this context, that exactly the point. That exactly the point, Shruts. So this is how things has to be looked upon. Now, if this is a situation, Shruts, that is to say, point number one, which you can see over here. In this regard, just a second. So, Shruts, in this context, in this particular context, Shruts, Please have a look. The supplies made during a tax period are declared in the return of the same tax period. So therefore, what does it imply? What you have done, students, you have filed a return belatedly. Return has been filed belatedly, students. Do you all agree? Return has been filed belatedly. And what is there in the ad? Students, point number 2. Return is filed before commencement of proceeding under 75 or 74 in respect of the said period. In respect of the said period. Are you getting this point? Now, please pay attention now. See, this is where you have to be very careful. Huh? Supposingly, it is a month of. Supposingly, it is a month of July only. So supposingly, it is a month of July only that the period is there. For the same July period, students, which has been there in this case. Return should have gone to August month, 20th of August. As you know, there is a delay in filing the August month return. Unfortunately, by the time I file the return for that particular period of July, I have not filed. Students, I have not filed for the month of August, students. I have not filed for the month of July. I have not filed by 20th of August. Unfortunately, by the time I now decide to file the return, what has happened? What has happened, students, in this case? So by the time, students, it is now being decided to file the return. Indeed, that exactly is the point. The department has given me the notice. And if the department has now given me the notice, students, now what happens? My case now will go where? In situation number 2. In situation number 2. Situation number 1 will apply, students, 2 main conditions. Condition number 1 is about what, students? That you have filed the return, but after the due date. And the return has been filed for that entire tax period. So in my example, it is July, no? In my example. So you have, for the entire July month, whatever supply that has taken place, you have filed the return, not on 20th of August, say after that, but you have filed. Okay, which means that the department has not given you any notice on the date up till the date when the return was filed. Up till the date when the return was filed, the department has not given you any notice. If you satisfy these conditions, students, then you are in situation number 1. And you don't satisfy this condition, go to situation number 2. What about in that previous example, which I had taught to you yesterday? February month. Now, is that February month falling in that particular period? And the answer is no. The supplies of the February month doesn't fall. That supply of the February month is not covered in this case. So therefore, now if you are capturing that supply of February month in the return that you are filing in the month of August, whether your case will be in situation 1 or situation 2, These are the permutation combination that you need to be very careful about it. And if you are all through with this combination, students, then the game is on. What is the game, students? This is the game that you have to play. So interest now payable on that portion of what? That portion of tax that is paid by only on that portion, truth. Underline the word only on that portion. So it is not on the entire amount. It is only on that portion of the amount. Only on that portion of tax. In this case, so interest payable on that portion of tax that is what? That is paid by e-cash ledger, students. So because obviously, do you pay the tax by utilizing the CC? Do you pay the tax by utilizing the ITC? Yes. So will you be required to pay the tax on that portion which you have paid by utilizing the ITC? Will you be required to pay the interest on that portion which you have paid by utilizing the ITC? And the answer is no. Only on that portion of the tax that you have paid by utilizing your e-cash ledger account, only on that the interest at 18% will be calculated. But provided this falls under this situation. Which situation? The return has been filed capturing the supply of that entire period, but the return has been filed belatedly. Return has been filed belatedly, but before the notice that the department has given to us. The notice that the department has given to us. So therefore, can I say there that is interest to be charged on what? On net tax liability. What is net tax liability? That is the tax liability after utilizing your ITC. Because that net tax liability is what you're going to pay it by cash. You're going to pay it by cash. So only on that net amount that the interest would be calculated in this case. So this is what it is over here. What about for this any other situation, students? For any other situation that you can see, which has been there, the interest, see that? Interest payable on the amount of tax which remains, which remains, which remains what, students? Indeed, unpaid, which remains unpaid, students. Which means that this would be, that is interest to be charged on gross tax liability, on gross tax liability. Is that point clear to all of you, students? That exactly is the point, students, over here. That exactly is the point, students. I hope that all of you are now clear with this particular point. Now finally, the last point, students, which has been there, particular point. Point number 5 over here. What is the period for which the interest will be calculated? What is the period for which the interest will be calculated? The period for which the interest, students, will be calculated would be what? The period of delay. The period of delay in filing the said return beyond the due date. Obviously, after the due date, that is after 20th, whatever is the delay for that period, you're going to calculate the interest. In this context. Now, this is interesting over here. Here it is what, Ruth? In all the other situations, starting from the date, from the date starting from the date when the tax became due. So the tax became due. How do we identify the tax became due? In this case, through time of supply, the chapter that we have done. So here it is about the period of a delay in filing the return beyond the due date, beyond the due date of filing of the return. But here, for situation number 2, the period for which the tax would be calculated would be what? Starting from the date when the tax became due and not from the due date of the filing of the return. Now, this is what situation 2 is in this context. From date when tax became due, which is to the time of supply, till date of payment of tax. If you all are through with this one, let's take the next one of 53, a small provision only. So 53 will be finished off very fast. Hardly there are any points. So coming to this third one, students. 53. 18% on what? Interest on what amount? Here, students. So here it is ITC which is wrongly availed and utilized on that portion of the amount of ITC which is wrongly availed and utilized, students. And what is the date, students, period which we're talking about it? Point number 5. So the period, students, would be in this regard. Starting from the date of utilization. Utilization of what? Of wrongly availed ITC. Till which due date? The date of reversal of such credit. Till the date of reversal of such credit or payment of tax in respect of such amount. Starting from the date of utilization of wrongly availed ITC. So from that date, students. So from which date? The date when you have utilized, that is the time when you utilize your ITC wrongly. Till what date, students? Till the date of the reversal of such credit. So when you make it good. What is reversal of credit? What do you mean by reversal of credit? To make it good. The reversal of credit, students, essentially would mean to make it good, isn't it? Because you have done that thing wrong, no? By utilizing a wrong credit, you have done it wrong. So when you are reconciling it, so the date when you are reconciling it, that will be the date. I hope that every one of you are clear now with this. So this is what, students, it is in this regard. I hope that all of you are clear with this one. But before I put across to you certain questions on this, I would want all of you, students, to solve and be ready for with it, students. Because For last session and we are done with it. So therefore, I just want you to try for this particular question. Every one of you. While looking into the provision, students, try to apply. Looking into the provision, students, try to apply. And I just want it because errors. See, students, certain question you should not have hand holding. Please pay attention. Only on the basis of provision you should be in a position to apply. I just need to know what would be your answer. Please pay attention to these details, especially for interest calculation. So deliberately, students, before I step in, I am just putting you on this particular recourse before I come into play. So students, over here, you are going to do question number, students, beautiful question number 15. A beautiful question number 15, students. I'm just seeing if I can get one more question. This first try has to be done because this is the only calculation, students. I'm telling you, you will make error. Make it now. This is such a good time because if I solve it, you copy it. Gone. Question number 15, students. I'm giving it to you. Apart from that. Let's stop it off of TDS, the next provision itself. This question also should have. Beautiful. Question number 5. Question number 5 and 15 I'm giving you as homework. Students, two questions. 5 and 15 I'm students giving you for homework. Is that not clear to all of you? 5 and 15. You will have to do it and be ready. I have told you students you will make a mistake. You should do one thing. If you do it now, you make mistake, you will understand after doing yourself. Now students, you will understand say 50 to 60%. Not that confident. Then let me come in. I'm telling you, you will not make any error in the exam. But if I do it now and then you have to follow it up, chances are there that you still can make an error. This I don't want it. Error-free calculation has to be there. I have done the provision, read the provision, get the answer. Is that clear to all of you? Students, I'll see you then tomorrow session. Tomorrow evening, this topic is over. Students, Saturday, tomorrow is over. TDS and TCS, two sections are only left. So questions are there. We'll solve it. We'll through. Okay, and then on Sunday, we'll start place of supply. Why should so please do this two questions. It's very important before you step in for the next class. Fine. Tomorrow's classroom timing is same time because tomorrow I'll be back to my studio. So therefore, in that case, students, tomorrow you will be having the lecture at 9:15 at night. See you then. Take care. Bye.